Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como from Ireland, Como Lafoy. We've got a little bit of a different program here for you today because we're going to talk about some fundamental analysis after Statistics Canada released its information today on March 31 stocks. We're also going to get into a little bit of technical analysis, and I'm going to try to share, not that the market's trading live anymore, but just share my screen and kind of change the charts ongoing instead of taking static shots of the charts. So you want to stick around to the end of the video to see that. We're going to run through the fundamentals first and then go into the technicals afterwards. So let's start here with what happened in markets today. Canola was essentially or almost unchanged today, finishing at $700.90. On this chart here, it looks as if that is a loss, but the candle is actually green on the chart today. So basically an unchanged day for canola today, although there was a lot of volatility and a wide spread between the low and the high. So we'll talk a little bit about that in our charting section. Minneapolis wheat down 2.25 to $6.75. Kansas City down 4.75 to 5.24 3/4. Chicago wheat down a nickel at 5.29 1/4. Soybeans up 5.75 to 10.45. Corn was down 1.75 to 4.47 1/2. The Canadian dollar has sunk now below 72 cents. We'll dive a little bit more into that in our Friday report that we released to our premium subscribers. And live cattle up 172 today to 214 1/4. Feeder cattle up 265 today to 301 1/4. All right, let's get into some nerdy fundamental analysis here for a little bit. Don't want to brag, but I pretty much pegged the canola stocks right on. And I'm going to open the kimono here and tell you how I did that. But overall, March 31 stocks of canola came in at 5.869 million tons versus last year's 9.58. So right there, you can tell already that there's a significantly tighter situation in canola this year than there was last year. On December this, so here's where I nerd out and tell you how I came to this very simple conclusion. On December 31st, Statistics Canada reported there was 9.853 million tons of canola on farm. Okay, so already lower than last year. If Statistics Canada also releases producer deliveries of major grains, canola is one of those major grains. If you take, the sum of these three months in the first quarter, that equals 5.2 million tons of canola that's delivered from January 1st until the end of March. Okay. So that means that if there was 9.853 at the start of January in farm bins and farmers delivered 5.26 million, that leaves 4.93 million tons in farm bins. Okay, now here's the commercial stocks. This came in at 1.2 million tons. That's not necessarily on March 31st, but very close. So there wouldn't have been much change in one day over there. So call it 1.2 million tons. In commercial bins at the end of the quarter. So now if you take that 4.593 million tons of farm stocks plus the 1.209 million tons of commercials, you get 5.8 million tons of canola. Now, Statistics Canada reported 5.869, basically a rounding error. So that just proves that you don't need to be a genius in order to do fundamental analysis here in Canada. So I'm probably paying myself too much. All right. So here's I'm gonna looks like I made some previous notes here. I'm gonna delete those and restart here. So here's where farm stocks sit now on canola: 4.582 million tons. That's pretty small. These years here, 2022 and 2013, followed years where there was production loss due to dry conditions or heat and drought. So we're kind of getting into drought level conditions here on the on-farm stocks. It's very tight. Relative to history, this is a very tight year for canola. Now, again, if we want to use some CGC data, you can see here that I did some math behind the scenes here. But for you know, CGC reports deliveries of canola as well into licensed facilities. Now, canola generally, most of the canola gets delivered into licensed facility as opposed to, say, a commodity like barley or oats or some of the other minor commodities where there's a lot of non-licensed buyers that buy those commodities. Canola is largely purchased by licensed dealers or licensed purchasers like elevators, like crush plants, et cetera, et cetera. So these numbers are pretty accurate to Statistics Canada's numbers. So since March 30th, there's been 1.6 million tons of canola delivered. So that means that there's only 2.976 million tons of canola left in farm bids on or about the end of April. So you can kind of understand where this tightness is coming in from a fundamental standpoint. Okay, we're going to move on from canola here for a second. I'm going to show you some wheat stuff. Wheat isn't too far out of the ordinary. Non-durum wheat came in at 13.4 million tons. Yeah, that's kind of low, but not super low. There's a little bit of a difference in the on-farm storage when you compare it to the combined commercial and on-farm. On-farm wheat stocks are 10 million tons, a little bit lower than last year, a little bit lower than the last couple years. Still not as low as the drought year of 2021, but or 2021-22 crop year. But still a little bit tighter than average if you take out that drought year. So that's where we're at for wheat. Another statistic that kind of stuck out to me today on the stocks was the Manitoba on-farm soybean stocks. So this will obviously be of interest to Manitoba farmers. This is the change in on-farm stocks of soybeans year over year. I think the declines in the soybean futures market and the cash price as a result resulted in less soybeans getting sold earlier in the year, and so there may be more stocks or more inventory than farmers would have liked. Just for reference, that number is currently at 434,000 tons of soybeans in Manitoba. Okay, looking at here's the table from Statistics Canada's release today. You can feel free to screenshot this, or I can leave the link in the description for this PDF of this release. Speaking of links in the description, we also will put our link to subscribe to our premium content in the description. You go to canadianagmarkets.com to subscribe. You get all of our premium content, including all of our in-depth fundamental analysis, our weekly report released on Friday, our hot takes, and any other information that we deem important. You also get a morning commentary that gives you some bullet points and things like that of what's happening in the marketplace as you start your day. All right, I'm going to move into a bit of a different direction here, and we are going to take a look at hang on, let me get situated here. We're going to take a look at some charts. This is my charting software, so this is, in essence, real time, although the market's closed, so you won't be seeing any changes in the pricing here. I'm just going to kind of go through some of these charts instead of putting static ones into a presentation. I'm just going to kind of go through some of these, see some interesting things. As you can see, I've put a couple of extra indicators down here on my chart that I don't normally show. One of them is volume. The other is open interest. I'm going to back this up today. So this is kind of the chart that I normally share, but I'm going to show a 1 minute chart today of what happened in the dying minutes of this market or during the trade of this market, because I thought it was kind of interesting. Again, this is 1 minute charts here. So as we kind of moved into the start of the day, we saw a rise, particularly right at the point where the Statistics Canada information was released. As you can see down here, there was some good volume that accompanied that. So, generally good volume in a rising market is generally a good sign, particularly when you see rising open interest in these. That would be the green bars here on the volume, signify that there's more contracts being added. However, the market turned very quickly after that and basically declined for much of the rest of the day. However, a lot of that was done on lower volume. You can see here that there was some spikes in volume when we saw some bullish activity happening. So once the market kind of settled and started to move higher, There may have been more sellers that entered the market. As you can see here, this red bar indicates that there was a decline in open interest as a result. Same thing here at about 9:30 during the day, and then it kind of trailed off for most of the day. And as you can see, the market just kind of moved sideways. We saw a kind of a punch of volume at the beginning of the day, but nothing too major. This candle isn't quite accurate. The settle was a little bit different than what we're seeing here. We did settle at just or 699.50, I guess. So a bit of a dip into the end of the day. Um, but overall, day over day, or from yesterday, we're basically unchanged. But you can see that there was a significant amount of activity that happened inside of that intraday move. Now I'm going to go back out to our regular daily chart here. As you can see, the trend line here is still holding. So we've seen a number of tests over the last couple of days of that test of trend line. It's still holding. The 20-day moving average is still kind of hugging that trend line, although the momentum is fading a little bit. The 20-day isn't moving as quickly or as aggressively as it once was. Overall, this still looks like a decent chart, although we're starting to see a bunch of tests just above $700 that continue to fail. That's a little bit of a concern there. Um, the volume as well, has kind of been. I'm gonna go back out now and go to daily nearby, because this kind of shows a better trajectory of volume in the daily chart here. As you can see, we're not seeing big spikes in volume. We didn't see a big spike in volume in this move higher. So not a lot of, but we did see kind of a move up in open interest overall as that was moving higher. That kind of signals that we are still in a bit of a bullish fun technical format here. Rising open interest means that more traders are opening more contracts. So there's more contracts open on the market than there would have been previously. We still haven't gotten back to some of these older highs in the front month, but overall, rising open interest in a market that is rising is a generally positive sign. But we are starting to see kind of some signs of potential topping there. I also want to go back to the weekly nearby here. I'll just kind of punch in a little bit more. Here it kind of shows that we're actually seeing a petering off here of volume. And that's a bit of a concern from a technical standpoint. That means that there's less interest in trading this market overall. So it's not like it's frothy or overly subscribed to. Even though we're seeing this rise in open interest, we're not seeing a rise in volume that accompanies that, and that's a little bit concerning as well. So now, once we see kind of some topping action in this market and some tests of previous highs and failures to kind of push well above that $700 area, I'm going to go back to my daily chart here. It's starting to look a little bit tired, and I'm sure there's a lot of folks that are issuing guidance right now to get some sales done in this market, either old crop or new crop. Both these markets are kind of exhibiting some of the similar traits here. So just kind of wanted to go through and show that level of technical analysis and pull back and pull forward and things like that. Today was an interesting day in the canola market that made a new high. What was the high today? 714.60, but then faded those very, very quickly intraday. And so, there is a lot of selling pressure once we get north of 710, even north of 700, it seems like. So you might want to just realign some of your risk appetites here. Traditionally and seasonally, the canola market does tend to peak in May. It did so even in the $1,200 year of 2022. So just keep that in mind as we go forward. All right. Thank you very much for tuning in. We will see you again tomorrow. Tomorrow is Friday. Have yourself a great day, and we'll see you again.